Hello traders, the title of the video is Elliott Wave Trader puts copper in the Elliott Wave spotlight. We are analyzing copper, alright, we're on the monthly chart, and I'm using Trading View platform. Normally traders know that I use a TC2000. I'm still using TC2000, but I just subscribed to the Trading View platform for the commodity data. All right. So I've done my homework talking about Elliott Wave Trader puts the copper in the Elliott Wave spotlight. Feel free to disagree with my wave count. This is my first wave, a second wave on the monthly chart, a third wave on the monthly chart, fourth wave, and the fifth wave has been extended. All right. Now, whenever we are counting wave, we need to ask the question, do we have all the data? All right. If you do not have all the data, which I think we do not have all the data here, because the data that I have is from 2003, so there must be more to that. But with all I got now, I can only work with that. So if you are looking at, if you have more data than myself, and you see something less, let us know in the comment section, all right? So we leave it as it is now. So that's the multi-wave. Is that a multi-wave? All right, maybe. Or is that a portion of the real multi-wave? Are we missing more data here? All right. So after the multi-wave, we have a flat correction. Okay. First retracement and double retracement. A, B, C. Well, this is the C wave of the flat correction. In fact, this is an expanded flat correction. If you are new to Elliott Wave and you're wondering what is a flat correction, go to www.24elliottwaves and check out the webpage relating to the flat correction. It's a powerful Elliott Wave pattern. You will see them very often on the 50-minute time frame, or you will see also very often on the 4-hour time frame and also on the weekly charts. All right. Especially if you are day trading, this is a nice, Elliott Wave pattern to use to look for, all right? And when you see, for instance, on the 50-minute time frame, you want to go to the 4-hour time frame to investigate. If you see the flat correction pattern on the 4-hour time frame, you go to the weekly time frame to investigate. If you see on the weekly time frame, you go to the quarterly time frame to investigate, all right? That's how you use it. So after the flat correction, all right, we see that the price ran very fast up. So what I was going to remind of traders is that we have a multi-wave, and then the flat correction was correcting that bullish trend of copper, bringing the price to the 78.6%. You can see that 78.6% Fibonacci retracement of that trend. After that, people were expecting a new trend, which is normal. The price went up, up, pull back, and then up again. If you apply Fibonacci extension to this bullish move, you'll notice that that supposed to be a trending first has stopped at 138.2% Fibonacci extension level of the prior trend, indicating to us that this is not a proper trend. Not only the price structure, but where it did stop at 138.2% Fibonacci extension level of this bullish move is alerting us that probably this is the X wave. So we can label our first flat correction as a W, and we call this one a trending first that has failed as an X. Is that something you can work with? Yes. So when the X, the common center line of the X is broken, so you will be drawing a common center along the trend, among this supposed to be a trending first. As soon as it's broken, if I did happen here, clean, beautiful, very nice and beautiful, right? So what has happened? You see, are you with me? Okay, so look at that. You see that line? Can you see on your chart? Or am I talking to myself? Okay, so if you look at that line that I put on my chart, that trend line, I draw it very close to the first leg of that supposed to be a trending first. And then you pull back, it cross this one. You can see the price break below that trend line and retest it here on the edge. Haven't I said that that's what the price doing all the time? Break below, retest, and then from there, look at that. What has happened here? Professional use what we call a top-down trading method. Yesterday we were recording a video, live streaming video. Today we're talking about option trading. So what I was saying to trader, if you use option, one of the mistakes that those who are using the call option, the put option are doing, because they think that, okay, I have 1 month, I have 3 months, okay, for the time expiration of the option. All right, so they say, all right, I will just buy, I will just sell. Don't do that. You can improve your option trading by incorporating also what we call a different time frame trading method to improve, okay, your market timing. All right. So instead of just jumping into the water, hoping that it's warm, only to find out it's very cold, you want to wait for the signal. It was there, a signal. All right. At least the signal. Okay. At least the signal. You look for a best trading setup, high probability trading setup, double top, mark the crosses below is signal line, double bottom, mark the crosses above is signal line. It's happening all the time. This is one example. Like here, you see you have a double top. You'll notice at that point, mark the cross below is signal line. Look at that. All right? It's happening all over the place. Or double bottom, mark the crosses above signal line, or bullish chart pattern, and then mark the crosses above signal line, or bearish chart pattern, and mark the crosses below signal line. Those are high probability setup that option trader can use, but you want to combine that with a different time frame trading method. All right, am I talking too much? Okay, let's move on. We are talking about copper. A trader called PMC LLC did ask me to record video about copper. I recorded a video yesterday, but at the end, the recording was not successful. So here I am again recording the same thing I've done before, putting me under pressure. So after the X wave, we will be expecting the Y wave, WXY wave. You can see here the price start correcting, coming down. This move down is a corrective wave. Anytime you use the word corrective wave, you want to say, what is it correcting? It's correcting the X wave. Now, whenever you call something Y, or anytime you see that an Elliott wave pattern is completed, like here I'm putting here Y, you need to remember that the pattern can be extended. That's what you want to understand. Anytime you think that the pattern is finished, just remember that the pattern can change. It's not set in a stone. The reason why I'm saying that, I put the Y here, I'm still in my mind asking, is it truly the end of the Y, or is this portion going up or down here, or this section part of the Y? Because the Y is just another corrective wave. So the price can see here went down, boom, 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 down. Then when I boom, 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 up, it can go down, boom, 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 down. Then we will see a zigzag. If that is the case, we'll move our Y here and say, all right, it's a zigzag. But now that we are here, we put it here for now. This is something you need to remember that, okay? So another trader may say to me, George, you try to impress me, but I'm not impressed at all, because this is not a WXY wave. It's in fact a very gigantic flat correction. You will say, that trader may say to me, I'm now going to the mind of other trading, all right? Okay? So that trader may say to me, all right, George, while you are calling, all right, while you are calling the flat correction, this session between the two blue vertical line is just the A part of the gigantic flat correction. All right, George? And then this is what you are calling X, is just the B wave of that gigantic flat correction. Yes, George, it is an expanded flat correction because it went above the fifth wave. And here it is. So this is the A part of that gigantic flat correction. This is the B part of that gigantic expanded flat correction. What is happening here, you are seeing now, this is the C wave of that gigantic flat correction. Then I will say, so what? It is my wave count. All right, there's no big difference. That person is talking about corrective wave. I'm also talking about corrective wave. Where I'm putting my Y, that person may also be willing to buy like these people are doing here. And we are all in agreement, though we are saying flat correction, I'm saying WXY wave. Not big difference. So the reason why we go into the mind of other traders is to see whether they will trade against us or whether they will mess up our trade. And when they are doing so, we are aware of what is going on, so we adjust accordingly. If we don't like what they are doing, we can just close the trade and go, maybe take a small loss and just go away and say, I'm not happy with this crazy market anymore. I can't take it anymore. I'm going away. All right, you can do that. It's your money. You just pack your bag and go. All right, you don't have to wait till the game is finished. All right. So this is about copper. So there was a trend in first, and we all agree that there was a correction, and that correction probably is ending here. So what is the next scenario? So we have finished to analyze copper. Now what we need to do is a kind of a forecast. What is a forecast? A forecast is an expectation, meaning that we want to see the different scenario that can occur. That's a forecast. It's not about exactly what is going to happen. It's what are the possible scenarios that can occur, the realities that can occur in this messy financial market. This is the next step now, okay? So, generally speaking, when we see a trending phase and a WSY, trader very often will be thinking of a new trending phase, a new motivation. So, probably trader will be calling this on their chart first wave, and they'll be saying, all right, we are now in the second wave. It can come down all the way from here, but we don't want it to cancel the first wave. So some trader, I can assure you now, they are thinking of the third wave of a higher degree for copper, provided that we have enough data. Is that all? Let me know in the comment section. I believe some trader may have more data than myself. If you do, all right, can you put the chart somewhere we can see them, all right, or refer me to a place where I can check it out, all right? That would be great. I don't think so, because 2003, people were trading copper before that, isn't it? So I'm just working with what we got here. We want to have all the data. We're not afraid of it, okay? So we can see the bigger cycle, mini cycle, everything else. Yes or no? What? So a lot of traders will be expecting a new trend here. All right, they will say, all right, probably we have a new trend, a new impulse wave. So there was an impulse wave. Now we say a corrective wave is ending here. Trader will be expecting another impulse wave. Probably they will call it third wave of a higher degree. That's one scenario. Does it mean that that scenario will definitely happen? It may not at all. All right. The next thing that I said to trader, talking about how to combine Elliott with trading and Fibonacci, and as I said also before, that one cannot pretend to be a qualified Elliott with analyst if one does not know anything about the Fibonacci pattern, the Fibonacci retracement, Fibonacci extension. If one cannot combine the Elliott with trading with the Fibonacci, this is true. All right, this is very, very true. So at this junction, as we are talking about another impulse wave, there's another group of traders that are called Fibonacci traders. They will label this one X. Don't think of that S, which finished with our S wave. Now we are talking about Fibonacci traders. So they will label this point X, and they will label this point A for alpha. All right. So they will be thinking that probably will have what? Either a Gartley pattern, a bat pattern, a crab pattern, or a butterfly pattern. Don't be hungry now, because we are not talking about American food, kata combo or whatever. All right, it's not about food; it's about Fibonacci pattern. If you are not very sure about what I'm talking about now, YouTube search Fibonacci patterns by Day Pro Traders YouTube channel. You will see a playlist, or you'll see it, or you may go to www.dayprotraders.com. So those traders at this junction will be expecting something at point B. All right, let's move on very fast so we can wrap it out. All right, are you still there? So they'll be thinking of a point B, and they'll be thinking of another point again called C. This is about the Fibonacci pattern. I will not dwell on it so much, so I'm just going to go very fast. Experienced trader will say, yes, George, that's what we want to do. We don't want you to waste too much time with those new traders, but we have to. Or I remember the last time you were also very new, so we need to think of the new trader. Don't be selfish, please. All right. Okay. So talking about Fibonacci pattern, they will do XA, they will think of A, B, C, D. Right? So those traders, right? So they will say, yeah, this is look like a point B now, George, or something a little bit above, or point B can go even up to this point, or something like that. So they say it's a point B, right? So they will say probably point C will be somewhere in this region. And point D, the first target for point D for delta, for the Gartley pattern, we'll be looking at 78.6% Fibonacci retracement of XA. That level is at the 3956. And they will say if it goes above that, they will be thinking of a BAT pattern, another Fibonacci pattern, at 88.6% Fibonacci retracement of XA. That level is at a 4193, 41938, all right? And if it goes above that level, they will think of butterfly pattern at a 138.2% Fibonacci extension level of AX. Now this time I did not say XA, I say AX. All right, they will be thinking of a butterfly pattern at a 138.2% Fibonacci extension of AX. And if it goes above that level, they'll be thinking of a crab pattern, Fibonacci pattern, at a 161.8% Fibonacci extension level of AS. So, as an Elliott wave trader, you want to understand that after a corrective wave is completed, or as a corrective wave is developing, all right, so there was a trending file, and you are expecting a corrective wave, you are thinking of all kind of Elliott wave pattern. There is another group of market participants that are doing their own thing, thinking of a Fibonacci pattern. If the in this scenario, it looks to me that the Fibonacci pattern trader will succeed, because I think copper has a high chance to go up, okay, something like that. I'm not saying, remember, this is an expectation, all right? We are looking at different scenario, all right? So, all right, different scenario. But in my mind, all right, I'm hoping that we have a Fibonacci pattern, meaning that copper will go up, maybe form a butterfly or a crab pattern before coming down. That remains to be seen. Nothing can stop this price now to continue to go down. And you may say, George, you didn't talk about that. So the price may form A, B, C, D, bringing in this section and bringing it all the way down here, forming A, B, C, D, bringing it back to the starting point here. You can do that also. That's another scenario. So you may say to me, George, why should I do now? That's a very good question. What you should do now, you should give priority to bullish signal above 26519. That's the line here. Okay, give priority to bullish signal, okay, above 26519, and give priority to bearish signal below that level. Look carefully. The price is consolidating. You can see here. You see, I'm checking the time because we don't want the video to be too long. The price now consolidating. Okay, roughly we put it here. I'll put it here between the level of 27801 and the level of 26325. This was going on now. Okay, you see the consolidation here. We're on the monthly chart. This was going on. So people are buying at this level of 26325. And if it reaches the level of 27801, that's what that means. So we have a consolidation. So anything is possible. If it breaks above at the top of the consolidation and finds support, then we can start thinking of the D for delta for the Fibonacci pattern level. And if you break below, okay, the lower part of the consolidation, we may be thinking of that gigantic A, B, C, D, something like that. Or the price may push it back down. Those are just a few scenarios that can occur, can bring it back here, forming a double bottom chart pattern. Or you may say, oh, George, what's going on? Before running up one more time. So at the end of the day, place on your chart that gigantic pitchfork tool. So you put it here, that's the first point for the gigantic pitchfork tool. That's the second point right there, and that's the third point. You see how the price went up to retest the median line of the lower half of that gigantic pitchfork tool. Now it's sitting on the edge of that gigantic pitchfork tool. Okay, the next pitchfork tool that you must push on your chart is connecting this point. That's the first point for the second pitchfork tool. This is the second point for that second pitchfork tool. That's the third point for that second pitchfork tool. You can see that that second pitchfork tool is a declining pitchfork tool. The first gigantic pitchfork tool is a rising pitchfork tool. So if the price continues to go down, we'll be watching that pitchfork tool. Right now, the price is at intersection of the median line of the upper half of the second pitchfork tool. Can you see that? It's the median line of the upper half of the second pitchfork tool, and also the edge of the bigger pitchfork tool. That's the edge of the bigger pitchfork tool. We have the intersection between the median line of the upper half of the second pitchfork tool and the edge of the bigger pitchfork tool right there. We are at a hot spot trading zone. The price is acknowledging that level, consolidating. So it's a consolidation play for day traders and swing traders at this junction using a top-down trading method. If you break below that level of 26325 and find a resistance, while a bearish trader will take it down to the next level. All right? So I've been talking to you now for 21 minutes, okay? Before we wrap it up, okay? Another thing that I want you to do is to apply Fibonacci retracement to the trending first, all right? And highlight the 50% and the 61.8% level. You can see that this session here brought the price into the sweet spot zone between the 50% and the 61.8% of that trending first. So draw those lines, the 50%, 61.8% Fibonacci retracement level of the multi-wave. The price came into that sweet spot zone, bounced up a bit. So that's what I'm saying to you, prior to bullish signal above that level of 26325. But remember, okay, the sweet spot zone of that trending first. I don't have time to do that now, okay? The next thing that I want you to do also is to apply Fibonacci retracement from this SA, all right? This move down, and highlight again the sweet spot zone of that one. It's 50%, is in the zone of 32338, 32338, and the 61.8% is in the zone of 35344. Highlight that sweet spot zone also. So you can see that there is a move up when, okay, into a little bit on the edge of that new sweet spot zone. So you want to know where is the sweet spot zone for this trending first and where is the sweet spot zone for this move down. Those are excellent trading zone that you want to be aware of. Look for trading setup, okay, and then when you see a value trading setup on the edge at a hot spot trading zone, implement a different time frame trading method. Minimum, you want the trend line to be broken, and then implement a different time frame trading method to trade it like a pro. So this will conclude our discussion today, all right, about Elliott wave trader puts copper in the Elliott wave spotlight. I can continue going on and on and on, but I don't want the video to be too long. If you have any more questions, feel free to put in the comment section, and in due course I will be recording another video to answer your specific question. If this video has been truly useful to you, please let us know by giving us the thumbs up. If you dislike it, be sure to mark it down. Okay, this is important for us to know whether you like it or dislike it, please. All right. However, if you think this is an essential tutorial that can help other copper traders, feel free to share with your friend on Google+, on Twitter, and also on Facebook. If you have not yet subscribed to our channel, this is the moment. Please subscribe to our channel today. Our channel is 24 Elliott Waves. Okay, digit 2, digit 4, Elliott Waves in plural. All right, subscribe today and stay put. And be sure to click on the notification bell. So anytime we are about to live stream a pre-recorded video, you will be notified by YouTube 2 hours before the live stream starts, and also 30 minutes, okay, before, okay, we start live streaming the pre-recorded tutorial. So subscribe and click on the notification bell, okay? If you want to know what we are doing on Facebook, our Facebook page is Stochastic Market. Sometimes I'm posting video first on Facebook, sometimes first on YouTube. So you want to track me and know, is he on Facebook? Oh, is he on YouTube? What has he done on Facebook? What has he done on YouTube? All right, so you can know what's going on. Okay. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about Elliott Wave Trader. Put copper in the Elliott Wave spotlight. Thank you for watching, and I will speak to you very soon. Happy trading to you all.